Okay, let's unpack this. Imagine getting a bit of a head start on understanding, a really rapidly evolving investment landscape, one that's, well, quietly reshaping a major global economy. That's pretty much our mission today. We're doing a deep dive into the Indian alternatives industry. And our source material, just so you know, is a really comprehensive report from CareEdge Advisory and Research. We're going to try and distill the most important insights, maybe some surprising facts, and help you feel really well informed on this, but without all the usual information overload.
Yeah, and what's truly remarkable here, I think, is how India's economic growth, its rapid ascent, is fundamentally altering the financial ecosystem there. It's creating entirely new ways for wealth and investment, moving, way beyond the traditional stuff. This deep dive should really help illuminate the structural shifts happening and just the immense, almost untapped potential in this market. It's quite dynamic.
Let's maybe start with the big picture then, because the numbers in this report, especially looking back over the past decade, they're genuinely striking. We've seen India's alternatives industry AUM, that's assets under management, more than double, right? Hitting, what was it, USD 136.1 billion as of December 31, 2024.
That's right, more than doubled.
So that's not just, steady growth. That feels like significant expansion, almost explosive.
It is. It really is significant.
And apparently this momentum isn't slowing down either. The AUM is projected to nearly double again in the next 5 years, reaching something like USD 247 billion by the end of 2029.
Exactly. That's the projection.
Yeah.
When you look at those headline figures, my immediate thought is that these aren't just big numbers in isolation. They signal a profound shift, a really sustained preference shift towards alternative assets in India.
Yeah.
And maybe to put it in perspective, let's look at the growth rates. The compound annual growth rate, CAGR, of these SEBI-registered alternatives compared to, the more familiar things like mutual funds or PMS, portfolio management services, or even bank term deposits.
Okay.
So between FY14 and FY19, alternatives grew at, well, an astonishing 84.7% CAGR.
84.7. Wow.
Yeah. I mean, just to graph that, while mutual funds were growing at a healthy, 23.6%, and bank deposits at 7.4%, alternatives were just in a different league altogether, multiplying capital at an extraordinary rate.
That's incredible.
And even more recently, say from FY19 to FY25, alternatives still led the pack. A 30.3% CAGR, still outpacing mutual funds at 18.5%, PMS at 12%, bank deposits at 11.7%. So these sustain much higher growth rates. They really underscore this fundamental recalibration of where the, let's say, smart money is flowing in India.
And all this is happening against the backdrop of India's wider economic story, isn't it? The country is projected to be the, third largest economy globally by 2028?
That's the projection, yes.
It feels like that rapid expansion must be just tilling the ground, creating really fertile soil for these alternative investments to not just grow, but properly flourish.
Absolutely. It sets the stage perfectly.
So, okay, that brings us to the really interesting part, the why. We see this dramatic expansion, these huge numbers, but what's actually fueling it? What are the underlying currents pushing this surge in alternatives?
Well, one of the most compelling drivers, I think, is the significant underpenetration of alternatives in India right now.
Underpenetration meaning?
Meaning India's alternatives AUM is only about 4% of its GDP. Now, if you compare that to mature markets like the US, Europe, even parts of Asia, where alternatives AUM is typically over 10% of GDP, sometimes significantly more. This gap, it's not just, there's room to grow. It's a clear signal that India is really poised for, well, almost an institutional capital revolution. It could fundamentally reshape corporate financing there.
So huge potential just waiting to be unlocked, basically.
I think immense potential, yeah.
And a big part of the who behind this growth, according to the report, is India's rapidly expanding population of high net worth HNI and ultra high net worth UHNI individuals.
That's a key factor.
Just quickly for context, HNI is usually defined as net worth over $1 million, including the main home, right? And UHNI is what, 30 million plus across financial and physical assets?
Correct. Those are the standard definitions used.
And the statistic here is pretty compelling. India's HNI population is expected to more than double between 2022 and 2027, jumping from around 800,000 to nearly 1.7 million people.
It's one of the fastest growing HNI populations globally.
And why does that matter so much? Well, it seems this increasingly wealthy group isn't just getting richer, they're actively looking for more sophisticated investment options, things beyond the traditional stocks and bonds. They want diversification, maybe tailored strategies, and they're finding that in alternatives.
Exactly. And it's crucial to note, it's not just about foreign capital driving this, although that's still important.
Mm.
The domestic investor base is growing significantly.
Ah,
The share of domestic investors in these alternative investment funds, or AIFs, actually went up from about 59% in FY24 to over 63% in FY25.
okay, so growing confidence domestically.
Definitely. It indicates rising confidence and growing sophistication within India's own investor community.
Mm-hmm.
And interestingly, while the percentage share of foreign capital dipped slightly,
Yes.
the absolute amount of money coming in from foreign investors still grew by 20% year over year.
Yeah.
So you still have strong interest from FIIs, but now with this increasingly solid domestic foundation.
It really does sound like a perfect storm of factors lining up. And Tanvi Shah, Senior Director at CareEdge Advisory and Research, she points to other key structural drivers too. Healthy economic growth, obviously. But she also mentions the increasing financialization of assets. What does that actually mean in practice?
Yeah, that's a significant trend. Financialization of assets essentially means more wealth that might have historically been, say, tied up in physical things like gold or property, or just held as cash.
Right, sitting idle almost.
Exactly. Yeah, wealth is now being channeled into a much wider range of financial instruments. And this shift creates a deeper pool of capital for industries like alternatives to tap into.
Makes sense.
And TANDV also highlights other key things, an enabling regulatory framework, which is crucial for these newer investment types. Plus, the clear desire among investors for better portfolio diversification, looking beyond just the standard options. And, importantly, increasing investment by domestic institutional investors. Think family offices, insurance companies, pension funds. They're becoming bigger players. All these things together, they create this really fertile environment.
Okay, so with all this capital flowing in, these structural shifts happening, the natural question is, where is it all going? Where is it finding a home? Which specific asset classes, which sectors are really attracting the bulk of this alternative funding? We mentioned the huge growth in AIFs themselves, more than 50 times growth in funds raised over the decade, which is just mind-boggling.
It really is.
Yeah.
And what's particularly insightful now is looking at the composition of asset classes within India's alternatives industry. There's a pretty notable strategic shift happening.
Okay.
Private credit and real asset strategies are gaining significant momentum, real traction. They're expected to grow from about 37% of the total alternatives AUM in 2024.
Right, combined.
That combined, yes.
Yeah.
Up to around 46% by 2029.
Almost half.
Almost half. And just to show how significant that shift is, think back to 2014. Back then, private equity clearly dominated. Private credit, real assets, they had much smaller shares. But by 2024, you had private credit at 17%, real assets at 20%. And looking forward to 2029, the projection is private credit hitting 25%, and real assets holding steady around 21%.
So a clear, deliberate move away from just relying solely on private equity, a real diversification within alternatives itself.
Exactly. It suggests a market that's maturing, offering a broader range of strategies.
That is a huge shift. And digging into the sectors, as of March 2025, the report identifies the key ones attracting AIF capital are things like fintech, health tech, renewable energy, also financial services, real estate, and ITITs.
Yeah, and that list itself is interesting, isn't it? It shows a strategic mix. You've got what you might call legacy sectors, perhaps, like real estate and BFSI, that's banking, financial services, insurance.
Right, the established players.
Exactly. But alongside those, you have these very forward-looking, future-facing bets, IT, pharma, and especially renewable energy. This diversification isn't just about spreading risk, though. It kind of raises an important question, I think, about how this specific blend contributes to both immediate economic resilience for India and also its long-term innovation potential.
That's a really good point. The mix itself tells a story.
It does. So look, to summarize for you listening, India's alternative investments industry isn't just, growing steadily. It feels like it's truly on the cusp of a really transformative decade. The incredible growth we're seeing, it's clearly backed by strong macro fundamentals, by increasing wealth creation within India, and by a maturing investor base, both domestic and international, that's actively seeking out and finding new opportunities beyond the traditional markets.
And as Tanvi Shah from CareEdge Advisory or Research emphasized, that AUM number is expected to nearly double again, hitting USD 247 billion by 2029, really driven by these strong structural factors we've kind of walked through today. So maybe the final thought to leave you with is this. What does all this mean for you? It's worth considering how this rapid evolution of alternative investments, happening in a high-growth economy like India, might influence global investment trends more broadly. And maybe think about what new opportunities, or perhaps even challenges, this might present for the more traditional financial markets around the world in the coming years. Something to mull over.